GALLOFIN, and my members are JESHEL, SINCHES, and NIKKI CAYUGAN. For today, we are going to tackle about English for Economics. What is the aim of English for Economics? So, English for Economics is designed mainly to meet the needs of the students of economic faculties of all the others who are interested in studying business and the basics of economics in English. The aim of English for Economics is to teach the students to read and analyze the professional literature, to give them the fundamental economic terminology for its further utilization in business practice, and to help them enrich to their economic culture. As a science of decision-making, economic philosophy operates in our daily lives. Whether we realize it or not, when we are evaluating the interest rates on our credit cards, or trying to decide whether to buy or release a new car, or go out to a dinner or vacation, these are all decisions we make using economic thinking. We live in a world of limited resources, and economics helps us decide how to use these limited inputs to satisfy our never-ending lists of wants and needs. Economics is also a large field with a rich history that's been explored and examined by hundreds of influential people, ranging from philosophers to politicians. So what is economics? In its most simple and concise definition, economics is a study of how society uses its limited resources. Economics is a social science that deals with the production, distribution, and consumption of goods and services. Economics focuses heavily on 4 individual ingredients that make up economic activity in our world today and can each be studied individually. Economics is split into the following 2 broad categories of study: macroeconomics and microeconomics. Macroeconomics is a branch of economics that studies the overall working of a national economy. It is more focused on the big picture and analyzing things such as growth, inflation, interest rates, unemployment, and taxes. When you hear the Federal Reserve raising interest rates, or that the national unemployment rate is 7.5%, you are hearing about macroeconomics topics. The branch of economics that studies how household and business reach decisions about purchasing, savings, setting prices, competition in business, and etc. So the main difference between macroeconomics and microeconomics is that microeconomics, it focuses at the individual level, while macroeconomics looks at the decisions that affect the entire countries and societies as a whole.
I am NIKKI CAYUGAN, and I will be discussing about the jargons of English for Economics. So first is accounts. These are the records of all financial transactions, including expenses and receipts of an organization or an individual. So, an account is a record in the general ledger that is used and stored transactions. For example, companies will have a cash account and in which to record every transactions that increases or decreases the company's cash. So, the second is balance sheet. This is a statement of company's assets, liabilities, and capital at a specific point in time. So, it is called a statement of financial conditions. An organization's balance sheet gives an idea of how much they own and owe, as well as the amount invested by shareholders. So the third is financial year or fiscal year. These terms both refers to a period of 12 consecutive months or 52 consecutive weeks, after which financial reports are prepared. So, it may not match with a calendar year and is also sometimes called a tax year. In the US, it is called a fiscal year. The fourth is earnings per share. This is the net income of a company divided by its number of outstanding shares. So, EPS indicates company's profitability. So, the fifth is golden rule. This is a term of fiscal policy that basically means that over an economic cycle, the government should borrow to pay for investments that benefits future generations. The number 6 is joint accounts. This refers to a bank account registered under the names of 2 or more individuals. All members can depend and withdraw money from it. Seventh is shareholder. A shareholder is any person or company that owns share of stock in a corporation. For example, James recently became a shareholder in a major corporation. Eighth is unit trust. This is an organization that pulls money from small investors and invests in its share and stocks under the trust deeds. For example, if you're a first-time investor, consider partnering without a unit trust. The 9 is zombie funds, a colloquial term for a closed funds. This term refers for a profit life insurance fund that has been closed to a new business. So, for example, Joe's Life Insurance Company is nothing more than a zombie fund, so it's better to stay away from it. The last one is capital gain tax or CGT. This is the amount of tax that is payable on a profit from the sale of a capital assets, either a property or an investment. And that's all the jargons for today. Thank you and God bless.
Good day everyone, I'm JESHEL SINCHES from grade 12 STEM students. Today, I am going to tackle about the history of economics. So, the history of economics entails numerous figures, courses, and books and can be traced back 1,000 of years. We'll focus strictly on the last 300 years and what is often considered the beginning of modern-day economic thinking. Here are a few of the most notable thinkers and their accomplishments. 17th, Adam Smith is largely considered the father of modern economics and capitalism. Smith's Wealth of Nations has a huge impact on economic thought still today. He reasoned that markets would work best if left alone and promoted that little government intervention in the economy was best. 18th, Thomas Malthus studied the populations, and his main contributions include his work on the relationship between food supply and populations. Another is Karl Marx, most noted for his advocacy of socialism and communism over capitalism, which he strongly denounced. He is arguably one of the most influential economists in history. Marx believed that communism was inevitable in the process of evolution. Last one is Alfred Marshall. Focused on the study of microeconomics and wrote Principles of Economics, which is one of the most influential economic textbooks of all time. Marshall proposed the idea that economics was a scientific discipline that required more mathematics and less philosophy. 19th, John Maynard Keynes was one of the most revolutionary economists of the 20th century. He argued against free market principles and promoted government involvement as a means of correcting depressions and recessions. The bailouts to large auto companies and banks in response to the recent recessions are one such example of government involvement. Thanks for watching. Please like, share, and comment your thoughts below. Thank you and God bless.